What if I told you that some of the most explosive growth potential in the defense sector isn't hiding in $100 stocks, but in companies trading for less than the price of your morning coffee? Hey everyone, I'm William, and welcome back to the channel where we break down investment opportunities with real analysis and zero hype. If you're new here, make sure to hit that subscribe button and turn on notifications, because we consistently bringing you deep dives into stocks that deserve your attention. Today, we reanalyzing to defense penny stocks under $5 that are making serious moves in emerging military technologies. Before we dive in, quick disclaimer: I'm not a financial advisor. This isn't financial advice, and you should always do your own research before making any investment decisions. These are high-risk plays, so only invest what you can afford to lose. The defense sector is undergoing a massive transformation right now. We're not talking about traditional weapons systems anymore. The future of warfare is being redefined by drones, autonomous systems, and space-based assets. Global defense budgets continue expanding, with the US alone spending over $800 billion annually, and that number keeps climbing as geopolitical tensions rise. What's fascinating is that while prime contractors get the headlines, it's often smaller specialized companies developing cutting-edge technologies that these primes eventually integrate into larger systems. This creates enormous opportunities for investors who can identify these companies early, before they scale up or get acquired by larger players. The penny stock space in defense is particularly interesting because innovation often happens here first. These companies are nimble, focused on solving specific problems, and don't have bureaucratic overhead slowing them down. But here's the challenge: for every legitimate defense penny stock with real potential, there are dozens with questionable fundamentals. That's why today's analysis is so important. We've examined financials, quarterly reports, partnerships, and assessed the actual market opportunity for each company. Let's start with our first company, and this one operates in a space becoming absolutely critical to military operations worldwide: drone safety technology. Think about this: drones have become ubiquitous in modern warfare and commercial applications, but they have one fundamental vulnerability. What happens when a drone loses power mid-flight, over a populated area, or sensitive military installation? This is where ParaZero Technologies comes in. Trading under ticker PRZO, this Israeli-American company has developed autonomous parachute safety systems specifically designed for commercial and military drones. You might be thinking, parachutes for drones, how big can that market really be? Here's what most people miss: the FAA and international aviation authorities are increasingly requiring safety systems for drones operating in certain airspaces, particularly for beyond visual line-of-sight operations. ParaZero's technology isn't just nice to have, it's becoming a regulatory necessity. Their SmartAir system uses proprietary algorithms to detect flight anomalies and deploy a parachute within milliseconds, compatible with a wide range of drone platforms. They've been building partnerships with major drone manufacturers and working on certifications that could open massive commercial and defense opportunities. Let's talk numbers. In recent financial filings, ParaZero has been operating in the challenging phase many emerging tech companies face. They have real technology and real customers, but they're still working toward consistent profitability. Revenue has been growing, though still in low millions annually, typical for a company at this stage. Their cash position and burn rate require careful management while investing in product development and certification processes. The company has taken steps to strengthen its balance sheet through strategic financing arrangements, but understand this: it's a company in growth mode, not profit mode yet. The real catalyst for ParaZero comes down to two things: regulatory tailwinds and defense adoption. On the regulatory side, as drone usage expands, especially in urban environments, safety requirements are tightening globally. ParaZero systems could become standard equipment, like airbags became mandatory in cars. On the defense side, military drone operations are expanding rapidly, and safety systems protecting expensive equipment and sensitive payloads are increasingly valuable. Recent quarterly reports show progress in expanding their customer base and working through certification milestones, which are critical leading indicators even if they haven't translated to explosive revenue growth yet. Now let's shift to our second company, and this one operates in an entirely different defense segment that's absolutely exploding: space. Citus Space, trading under ticker SIDU, is a space-as-a-service company building and operating its own satellite constellation while providing manufacturing services to other space companies. This is the new space economy in action, where smaller, agile companies leverage advances in miniaturization and launch cost reduction to compete in what was once the exclusive domain of government agencies. Citus Space's business model is multifaceted. On one side, they manufacture space components for other companies, providing revenue that helps fund their own satellite constellation. On the other side, they're deploying their LizzieSat satellites designed to provide Earth observation, data collection, and communication services. The company has made serious progress getting satellites launched and operational, a massive milestone many space startups never achieve. They've secured launch agreements with SpaceX and been steadily building out their constellation. Let's dig into financials. Citus Space has been generating revenue from its manufacturing and services business, crucial because they're not purely dependent on future satellite operations for cash. In recent quarters, they've reported revenue of several $1 million, which for a small-cap space company is meaningful. The manufacturing side provides foundation while they build the higher-margin satellite services business. However, they're not yet profitable and have been managing cash carefully while investing heavily in satellite deployment. Recent quarterly reports show progress in expanding manufacturing contracts and advancing their satellite constellation, with specific milestones around launches and operational capabilities. What makes Citus Space particularly interesting from a defense perspective is the dual-use nature of their technology. Earth observation and communication satellites have obvious military and intelligence applications, and the Department of Defense has been increasingly interested in leveraging commercial satellite capabilities to augment traditional military space assets. This trend, called hybrid space architecture, means companies like Citus Space could secure defense contracts for data services, satellite manufacturing, or specialized missions. They've been positioning themselves to pursue these opportunities and discussed partnerships with organizations in the defense and intelligence space. One key thing to understand about Citus Space is the capital intensity of their business. Building and launching satellites requires significant upfront investment, and revenue from those satellites typically comes over years of operational life. The company has had to access capital markets to fund growth, including equity raises that can dilute existing shareholders. Recent partnerships, including manufacturing agreements with other space companies and potential data service customers, demonstrate that other industry players see value in Citus Space's capabilities. So how should you think about these investments? Both Parazero and Citus Space are speculative growth plays in the defense sector. They won't pay dividends, they're not stable income investments, and they could experience significant volatility. What they offer is exposure to emerging defense technologies with potential for substantial appreciation if things go right. For Parazero, success means achieving widespread adoption as drone usage expands and regulations tighten. For Citus Space, success means getting their satellite constellation fully operational and generating meaningful revenue while maintaining profitable manufacturing. Both require patience from investors. These aren't overnight success stories, and anyone buying it needs to understand there will be disappointing quarters, dilution from capital raises, and setbacks along the way. Now let me quickly walk you through this infographic summarizing everything we've covered today. As you can see, both companies operate in high-growth defense niches with strong tailwinds. Parazero focuses on drone safety with regulatory momentum building, while Citus Space is in the exploding space economy with dual manufacturing and satellite operations. Both are pre-profitable, but generating revenue and hitting operational milestones. Key risks include capital requirements, competition, and execution challenges. The recommendation here is that these could work as small speculative positions within a diversified portfolio for investors with appropriate risk tolerance and longer time horizons. The defense sector's growth and the specific niches these companies occupy suggest real potential, but approach with eyes wide open about the risks. Here's your infographic summarizing both stocks. Parazero offers drone safety systems with regulatory momentum, while Citus Space provides satellite manufacturing and services. Both are high-risk, pre-profitable plays requiring small allocations only. That's it for today's deep dive. If you found this analysis helpful, smash that like button, Subscribe for more content like this, and drop a comment below telling me which defense stocks you want me to analyze next. Remember, always do your own research and invest responsibly. I'm William, and I'll see you in the next one.